Hey traders, Michael or Mini Frost here. You're here for another episode of Common Sense Market Analysis. Today's Monday, October 13th, 2025. You're looking at a daily chart of the SPY or Spiders, which is the proxy for the S&P 500. What do we have on the docket today? Well, it finally happened on Friday. We had a meltdown situation. We were down $18 or 2.70%. And switching over to the ES real quick, we were down 3.36%. So we could give that a little funny how that works. I'm talking about the 369 theory. If you know, you know. If you don't, check out the video I made about the 369 theory. Alright, so going back to the Spiders, we finally have a sign and or signal of a trend change. That's this big time reversal candle with volume. She blew past the 20 period moving average like a hot knife through butter, and then made it all the way down to the 50 period moving average, but just coming up a tad bit short. And then today we had a bit of a gap and go situation, a little DCB, and we finished the day up $10 or 1.53%, making her way right back to the 20 period moving average. Now, what does all of this mean in the bigger scheme of things? Do we have more downside potential? If so, where is that going to be and when? Or is this just going to be a one-day wonder type of deal and we're going to be retracing this whole movement? Well, we're going to get into that right now. So I'm sure a lot of you have been hearing a lot of different things regarding this movement on Friday. What caused this movement? We're hearing more tariff-schmariff talk, Trump pissing off China, 100% tariff increase on China. You still got the government shutdown in the background. You got Trump tweeting. You got more tariff. You got a whole laundry list of things that they're talking about. And as we know, the media, the talking heads on TV, like to blame this type of activity on the most recent relevant news. That being more of the tariff-schmariff shenanigans. But really, if you think about it, this isn't new news. Yes, the 100% tariff increase on China is new, but the whole tariff-schmariff ordeal is not new. They've been talking about this for months and months and months. Now, where am I going with this? Well, if we look on the weekly chart, what have we been saying all of this time? Is that we are heavily extended from home base. Home base being the 20 period moving average. So I believe that Friday was the perfect excuse for the weekly chart to start making their way back to home base. We've been talking about it for a while, how extended we are. And as we know, markets don't like to be too extended from home base. And despite the big meltdown operation on Friday, believe it or not, we are still above all the moving averages, so the trend is indeed your friend. And if you think about it, there's nothing wrong with the weekly chart. Okay, we've been due for a movement like this for a while now, being heavily extended. So just looking at this in a technical analysis perspective, there's nothing wrong with the chart. On the weekly chart, the larger time frame. The larger time frames are always going to be more dominant. I want to go over to the hourly chart because I just want to give you a different perspective, a different taste of the market. I put a line at 660. Let's go ahead and make this green because this line represents the longer term pivot number that we talked about weeks ago. We could scroll out a bit just to see. The pivot was indeed important over here, bounced right on it over here, and then we finally got above the pivot, which was the bull case scenario. But then look what happened on Friday during the rug pull event. We nailed the pivot this low right here. On the hourly time frame is at 659.47, so spiked it by a touch, but did find some short-term support at that pivot number. Because we know that that pivot number was important. It's magnetic. The market is attracted to that number. It's also a big fat round number as well. We did eventually start to close candles below, and then we had some more downside behavior, but capital B-U-T, look at where we opened today. Today's open was at 660.65. We had a gap up higher and opened pretty much right on the pivot. What was today's low? Today's low was 659.77, a spike of 23 cents of the pivot. The pivot was the low of day. How do you like dem apples? We were talking about this pivot number for a while and it's finally back in play. And we can still continue to use it as our longer term pivot number. Alright, so now the main question at hand is how do we tie all of this together? What can we expect later on this week, maybe even leading up towards next week? What is the ideal scenario? Well, the ideal scenario is going to be closing above and staying above the pivot at 660, which we already did today. And then if we start to get back above the 20 period moving average, we are going to reestablish ourselves above all the moving averages and then start to work our way up towards the high of this breakdown candle, back up towards the recent all-time highs. Now that is the ideal scenario, but let me ask you this. Is the market really going to give us the ideal scenario? Of course not. The market's sole job is to trick, trap, fool, and frustrate us. So while that is the scenario that we're all looking for, later on this week we can expect maybe another retest of the pivot at 660. Maybe the market can get slightly below the pivot, then back up, and really just some more back and forth action. And this could be the formation of a bearish flaggish pattern, going back and forth for a while, pointing to energy being released towards the downside. That certainly can be a possibility on the board, depending on how we treat the pivot, closing candles above or below. The more time we spend underneath the pivot, that's a tell/puzzle piece information that she's building energy to make another move lower. That pivot is important. One number that you should definitely be aware about is at 647.24. I would definitely write that number down and put it on a sticky note. So long story short, the market needs to play a little bit of defense around the pivot number, trying to recapture the 20-period moving average, and until we recapture the breakdown candle, no dice for the upside. How about a little lazy swing trader intermission break? On Friday, we reached our final profit target for PRU, Prudential Financial. The entry price was at 110.07. As you can see, pretty much nailed it right on the dot. Little spike of it, but that's all right. And then she came right back down, providing us a 5.73% gain. By the way, here's a list of all of our open swing trades. Obviously, this stuff is blurred out, of course. But as you can see, 9 out of our 10 open positions are positive right now. And most of them have already reached a bare minimum base hit, profit target number 1, locking in the risk-free emotionless trade. We got more entry alerts to come on the daily watch list, so if you've been thinking about joining the lazy swing trader, I think right now is just the right time. The lazy swing trader automagical algo system, with around an 88% win rate this year. It doesn't matter if we're in a meltdown situation, at new all-time highs, moving sideways, whatever the situation at hand is, the numbers work and they will prevail. And I'll show you in a second, because actions speak louder than words, that the numbers truly work. This is the morning game plan that's laid out to Inside the Numbers and Live Room members well before the market even opens. There's a ton of notes in here. We talked a little bit about the longer term pivot number being important at 660, but let's jump straight into business. We had the morning pivot number at 660.50. It was really 660.50 to 660 give or take. As you could see in the What's the Scoop for today, 20 minutes before the market even opened, I pretty much said that the initial support area was between 660.50 and 660 give or take. Going back down, we got some overhead resistance numbers. The first overhead resistance zone comes in at 661.60 to 663.45, and then a midpoint phenomenon number at 662.65, and then another zone right above at 664.35 to 665. Let's go check her out. Alright, let's go ahead and break this down. We got all the numbers on the board, a ton of overhead resistance numbers. Let's go ahead and start over here. This is where the market opened, and she opened right at the morning pivot. Right here, the 660.50 to 660 was the first initial support zone, and that was pretty much low of day. How you doing? And then right at the first 5 minutes of the day, she shot him up right towards our first overhead resistance number at 661.60. The high was 661.67, spiked it by 7 cents, and then ripped it right back down. Where to? None other than the pivot. That was a nice early morning trade that Live Room and Inside the Number members took. They got paid within the first 10-15 minutes or so. Alright, let's see what else we got. Right here in this area was another overhead resistance zone, stretching from the midpoint phenomenon to the back end number of the zone, overhead resistance number 2. And as you can see, that zone worked out pretty well. Found resistance up and around the zone, and then where'd she take him right back down to? None other than the pivot. It's extremely important to know your pivots. And the most important thing was that we were staying above and closing candles above the pivot number. So then we went right back up. Let's see what else we're working with. Right here on the dot at overhead resistance number 4 at 665, spiked it by a few cents, and then ripped it right back down. Where to? The midpoint phenomenon. Right here on the frickin' dot. And then we rallied back, went up to overhead resistance number 3, found resistance at that number, came right back down to the midpoint phenomenon. Came right back up, right back down. And as you could see, they were just playing ping pong off of all these numbers. So the moral of the story is the numbers work. A ton of traders were making money using the numbers. We'll give that a how do you like dem apples. You could pause the video, read the notes, and go back to the chart to double check the work. There's a lot of intraday updates in here. We got the morning SPY game plan, the afternoon write-up. You got all the SPY numbers at your disposal. Not to mention, we can't forget stocks on the move. Today we had 2 stocks. We had Pepsi and Fast. Only one of them hit their entry target. That was Fast and Old Company. Entry number 1, 43.22, and entry number 2, 42.81. Let's go ahead and check her out. We got both entries on the board for Fast and Old Company. As you can see, we spiked the first entry by just a touch, and then ripped it right back up. Came back down, tried to grab entry number 2, came up a few pennies short. The low was 42.84 against 81, so came up 3 cents short, but nevertheless ripped it right back up in the other direction and gave you about $1 on the trade. We had some fast profit taking in Fast and Old Company. How you doing? We got everything that you need in inside the numbers. We got the SPY game plan, the SPY numbers, we got stocks on the move, and then in addition, we have a list of 13 different markets with support and resistance numbers. If you need the numbers, you need the game plan, or you just want high quality trades, then you need to come check out Inside the Numbers. If you purchase the live room, you get Inside the Numbers for free. FYI. Alright, now we're gonna get serious. We're looking at my number 1 favorite market leading indicator, Camp IWM. On Friday, we were down 2.99%, and today we're up 2.78%, or $6.62. We got the moving averages on the board. So as you could see, today's movement, we went right back to the front end number of the overhead resistance zone. This zone has been on the board for quite some time now. Today's close was 244.41 against our number at 244.30. So that number is still important. This whole zone is still important, as you could see. We haven't really been able to push past this zone of overhead resistance besides up here where it was pretty much a spike the high and then rip it right back down. Speaking of that type of trade, Friday we went to retest these lows right here, and as you can see, this low right here comes in at 237.55. Friday's low was 237.56. Front ran it by 1 penny. But it's important to note that we're retesting that zone again, and we already reestablished ourselves above all the moving averages. Let's go ahead and take a look at the weekly chart, and in the bigger picture perspective, it looks like we really didn't make a dent. We're still heavily extended from home base. As long as we're staying below this zone of overhead resistance and closing candles below, today we pretty much closed right on it, but if we start to close candles below, then she's going to want to make another test or an attempt of Friday's low, or even make her way down to the 50-period moving average. Very interesting in my second favorite market leading indicator, the transportation department. Now this is kind of a stealth market. Not a lot of people use or even know about the transportation department, DJT, but it is our second favorite market leading indicator, but a number 1 canary in the coal mine. As we've been talking about for a while, we've been toying around with this pivot number at 15,650. We tried to break above this downwards trend line, trying to get out of this triangle pattern, and we did close candles above it for a few days, only 2, but we weren't strong enough to continue forward. We went right back to the pivot, tried again right here on Wednesday, wasn't able to do it, and then Thursday was kind of the tell. We closed back below the pivot. And then on Friday, we had that meltdown situation, and now we finally broke below this upwards trend line, and we are now below all the moving averages. So while all these other markets and my number one favorite market leading indicator camp IWM, they're all still above all their moving averages, the transportation department is below on the daily chart. On the weekly chart, and we could get rid of these lines right here, we don't really need that anymore, at least for today's video, but we are at the last line of defense, the 200 period moving average on the weekly chart. So we are showing some pretty big weakness in my second favorite market leading indicator, but a number one canary in the coal mine. Not a lot of people know about the transportation department, but this can possibly lead to some more downside behavior in the other markets in time to come. If we take out these lows right here, she pretty much stopped right in front and is having a little DCB type of situation. But if we start to get back below, then she's going to want to make her way towards this big time breakup candle low. What about the Q people? On Friday, she was down 3.47%. And that's actually kind of funny because if you guys know and you've been a longtime member of MSF, the first ever product we ever sold was the Lazy E-mini Trader course, and it was priced at $347. And my dad always told me that the reason why he priced it at that number was because those are important numbers in numerology. Fun fact. So in the Qs, and it's different in the spiders, in which we did manage to close above the 20 period moving average, reestablishing price above all the moving averages. So that is a little bit of puzzle piece information. But it's pretty much the same deal in the spiders. We got important pivot numbers in the Qs. I put two numbers on the board that you should probably write down on a sticky note. One of them is 600. That is a big fat round number, which we pretty much opened right on today. Today's open is 599.68. And then another pivot number is 597.74, which was pretty much today's low of day. Staying above this zone is going to be the bull case scenario. If we start to close candles below, then she's going to want to make another test or an attempt at Friday's lows and then even make her way down to the 50 period moving average. What about XLF, the financials? She's up 0.96%, funny how that works, and we did have a little triangle pattern situation going on, and Friday we finally broke down below it. Took care of some unfinished business, one of those numbers being 5270. It was an important number we've been talking about for a while now. We made our way down to the 100 period moving average, closing candles today above the 100 period moving average. Little recovery day from Friday's meltdown situation. But again, this is just normal behavior we're experiencing. We could get another move like this, another move slightly up, another one down, and this could all just be the formation of a bearish flaggish pattern. Okay, the ideal situation would be to recapture the highs of this breakdown candle and get back above some of these moving averages like the 50 and the 20, but that's the ideal situation. The market doesn't like to give us the ideal situation all the time. Okay, but just taking a quick look at a larger picture perspective on the weekly chart, we can see that we're still above the 20 period moving average. Not by a lot, but we're still above it, and there's nothing wrong with the chart. The bigger picture perspective is still in a pretty strong uptrend. So therefore, if there's nothing wrong with the financials, then it's highly unlikely that there's nothing wrong with the overall structure of the market. Last but not least, we got SMH shaking my head, the semiconductors, smash mouth. She's up 4.43%, a little more than $14 on the day, a nice gap up from Friday's woodshed day. But just looking at this in a technical analysis perspective, she went right back to, you guessed it, home base, the 20 period moving average, which we were heavily extended from. Found support off of it, and now we're already back at around 339.75. That is still very strong for the semiconductors. We'll see what tomorrow brings. We got turnaround Tuesday around the corner, but as long as we're staying below this breakdown candle high, we're not quite ready yet to make new highs. Okay, she needs to recapture this if she wants to get going. But as of right now, there could just be some back and forth action, maybe go back down to the 20 period moving average to retest these lows in and around the vicinity of these lows. It just so happens that the 20 period moving average fell in line right with this breakup candle low. It wasn't the exact low, but it's around 20% of the low. And the SMH found support at that area. Bigger picture perspective, still very, very, very extended from home base. still in a very strong uptrend above all the moving averages. Have I told you guys how much I appreciate each and every single one of you? Without you guys, these videos or MSF would not be possible. That is true and accurate information, put it on a sticky note. We're going to pull the ripcord for today. Thank you all so much for tuning in for another episode of Common Sense Market Analysis. I'm 𝐷𝐻𝐻. Don't forget to like, comment, subscribe, all that good stuff, as it helps me and the channel out a lot. We'll be back ready to go in uniform for Turnaround Tuesday. I hope each and every one of you has a great rest of your day. Stay safe and take care now, folks.